Hey listen, Grip just launched their newest product. Really? What's new this time? Bonds, the big B of investments. Nice! But why would anybody invest in bonds when we have stocks, mutual funds, and even fixed deposits for the risk-averse investors like me? If you think they all are same, then my friend, you are not a smart investor. Diversifying your portfolio is the very first lesson for investment strategy. And bonds are a good place to start if you are just getting started in the world of investing. Let me take you through some reasons that explain why you should invest in bonds. Number 1, regular cash payment. Unlike most in stocks, bonds provide regular cash payment. This gives you the certainty of a fixed income. Number 2, less volatile. Bonds are much less volatile than stocks. Number 3, less risky. Bonds are lower risk when compared to stocks. Companies pay interest to bondholders ahead of stockholders. Stockholders are paid only after interest on debt and other expenditures are paid. Number 4, access to a secondary market. You can sell bonds in the secondary market. This gives you a place to achieve liquidity when needed, which is another reason they are more desirable than fixed deposits. How can I start investing in bonds? For that, subscribe to our channel, stay tuned for our next video and visit gripinvest.in where you can add bonds to your portfolio starting at just Rs 10,000.